Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Thursday morning pre-market webcast. Okay, we'll start on the daily chart, then we'll head over to the hourly. We are in a band ride. Okay, what are the bands? The bands are these yellow things. If you haven't followed the webcast over the years, if you haven't been following the webcast over the last couple of months, we've got a ton of new YouTube subscribers over the last few days, and what we're seeing here is we've had this gigantic compression going back to, mid-July that finally gave some meaningful expansion last Friday. We've expanded now for 5 days. We've taken the Bollinger Band from the tightest bandwidth. I mean, it's not 10 years. I mean, I saw studies that said it was 100 years. So basically the 100-year storm as far as price compression goes. We've now expanded about 4.45. They have plenty of more room to expand. But, the number one thing that we look at is price. 2112 had been an issue. It was an issue, so here's your price expansion, just to review. Weekly pivot, expansion downward. We make this low at 2100 quarter, okay? We find some footing there, all right? Then we have the Monday, snapback rally, bear market rally, whatever you want to put on it, relief rally, back up into the 50s, okay? The bears had to defend the weekly pivot, 2136 quarter. They lost the tape here. Then the bulls blew it. The bulls needed support here on Tuesday. They didn't get it, and they were punished for it with a move down to 2112. 2112 held up Tuesday afternoon. Yesterday, we traded up into the 34s. We spent the majority of the day, though, working that off back down into the 2112 area. So 12, we said 12 was important. 12 held up yesterday. It broke in the overnight. Now, the break in the overnight gave up a nice-looking rally. Not quite 20 handles, but pretty close. So there's plenty of volatility to go around. I didn't trade last night. I traded the night before, but the volatility that's contained in the regular session now is back where it should be. It's not too fast to trade. It's just very opportunistic. And I was saying yesterday, the daily, weekly, the monthly goals, everything, it's September 15th and all of that stuff has been hit. And that's a byproduct of the tape. As we go into today, any rally has got to hold weekly pivot. If the bears give up weekly pivot again, I think you could potentially have a move all the way back up to the mid band on the daily chart, which right now is at 64 and change. Okay. Ideally, the bears wanted to make a stand here at the purple dotted line, which is today's daily pivot in the 20 area, not quite 21.21. We'll have to see what the regular session brings, but the bottom line is the bears need to get below 2100 quarter. They need to break this low. They need a lower low on the daily chart. If they're able to accomplish that, that will get them another leg of down move. Certainly to test this 2081, 2082 floor, which was your double bottom back right around, wrapped around the 4th of July weekend that got, 60, 80 handle move up from there into the original compression phase. Okay. So if they're not able to do that, if they're able to break this, they get down to the 81, 82 floor, that coincides with the 200-day exponential moving average. I've said this in years past. I said this when we were, people were looking, can we trade to 2000? Can we trade to 2100? We've got this crowd out there that wants 2200. They want the 2200 area. If you want the 2200 area, the best way to get there would be to go down to the 200-day exponential moving average and the floor at 2081, 2082, and rip it from there. Everybody's had a chance to reload. You definitely have the bears leaning out over the tips of their skis, and you could very easily see a very nice rip up off of that area. Just a thought. If you're the Bears, probably the best thing you could do from here, if you want an even deeper move down, would be to give them the rally, even give them a rally up to mid-band, but then actually defend it instead of doing what they usually do, which is lay down. But the bottom line going into today, Bulls won over 36. Bears have to hold 36. Bears need a lower low. Otherwise, the bands are going to expand, and we're going to start seeing higher lows on longer time frames, and we'll see a steady rally up from there to work a little bit of this off. Okay, everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out the website. Come join us in the chat room. I'll be back tomorrow morning with another webcast. Trade them well, everybody.